Assalamu alaikum and good morning everyone. So in this session, we'll be discussing the next topic on conceptual framework. So what do you understand by the framework for the preparation and presentation of financial statements? So first, the framework for the preparation and presentation of financial statements is promulgated by the IASB and adopted by the local FRSC. Okay, so we have learned already all about IASB and FRSC on the previous topic. So what is the framework? The framework is actually a summary of the terms and concepts that underlie the preparation and presentation of financial statements. It is the underlying theory for the development of accounting standards and revision of previously issued accounting standards. The framework is an attempt to provide an overall theoretical foundation for accounting, which will guide standard setters, preparers, and users of financial information in the preparation and presentation of statements. So, in other words, the concepts are the foundation on which financial statements are constructed and provide a platform from which accounting standards are developed and revised. So the framework is concerned with general purpose financial statements, including consolidated financial statements. So these financial statements are prepared at least annually and are directed toward the common needs of a wide range of users. Okay, so what are the basic purposes of the framework? So the basic purposes of the framework are first, to assist the FRSC, the Financial Reporting Standards Council, in developing the accounting standards that represents Philippine GAAP, or Generally Accepted Accounting Principles. Second, to assist preparers of financial statements in applying accounting standards and in dealing with issues not yet covered by GAAP. Third, to assist the FRSC in its review and adoption of IAS, or the International Accounting Standards. So the FRSC will review, and adopt whatever or what standards are applicable to the Philippines. To assist users of financial statements in interpreting the information contained in the financial statements. Fifth, to assist auditors in forming an opinion as to whether financial statements conform with Philippine GAAP. And last, to provide information to those interested in the work of FRSC in the formulation of PFRS. So let's explain the authoritative status of the framework. So again, if there is a standard or an interpretation that specifically applies to a transaction, let's say a sale transaction or an installment sale transaction, the standard or interpretation overrides the framework. Therefore, what we will use is the standard or the interpretation in that particular transaction. Second, in the absence of a standard or interpretation that specifically applies to a transaction, then the management will consider the applicability of the framework in developing and applying an accounting policy, as long as it will give a relevant and reliable information. Third, it is to be stated that the framework is not PFRS, so this does not define any standard for any particular measurement or disclosure. So nothing in the framework overrides any specific PFRS, and if there are conflicts, the requirements of the PFRS will always prevail over the framework. So therefore, we need to follow the PFRS. We will use only the framework if there is no PFRS or any interpretation or PIC regarding that transaction. Okay, so now what is the scope of the framework? So first, the objective of financial statements. Second, the qualitative characteristics that determine the usefulness of information in financial statements. Third, the definition, recognition, and measurement of the elements from which financial statements are constructed. So there are 5 elements, no? Okay, and then we will discuss that later. And the concepts of capital and capital maintenance. So the framework is also applied to the financial statements of all commercial, industrial, and business reporting entities, whether in public or private. So however, for special purpose financial reports, this is not within the scope of the framework. Okay, so what is the objective of financial statements? So again, The objective financial statements is to provide information about the financial position, which is found in our statement of financial position, our financial performance, okay, in our statement of income statement, and the cash flows of an entity that will be useful to a wide range of users in making economic decisions. So again, this will serve as a review, right? So what is the financial position of an entity? So this includes the assets, liabilities, and equity at a particular date. So as of January 1, these are our assets, liabilities, and equity. As of December 31, this is our assets, liabilities, and equity as of a particular date. So the financial position pertains to the economic resources and your assets, the liquidity and solvency of our liabilities, and financial structure of our equity. No? So what is our financial structure? And the capacity for adaptation of an entity. So it is included in the statement of financial position, or previously known as the balance sheet. Okay, so let's try to define these important terms. Economic resources refer to the assets owned by the entity. So the assets owned by the entity. Okay, so the information about the economic resources controlled by the entity and its capacity to modify these resources is useful in predicting the ability of the entity to generate cash and cash equivalents in the future. So does it mean that we have cash, we have collectibles, we have what other assets, PPE, okay, land, okay, so that will be used, no, to generate cash to in from our business operations. Second, liquidity. Liquidity is the availability of cash in the near future to cover currently maturing obligations. So yung mga current liabilities. Solvency is the availability of cash over a long term to meet financial commitments when they fall due, especially for bonds, okay, and other long-term obligations. Financial structure is the source of financing for the assets of the entity, whether it is borrowed capital, okay, or invested or equity capital. Okay, so financial structure refers to how much from the assets has been financed by the creditors and how much is financed by the owners. Okay, and then next is the capacity for adaptation, the ability of the entity to use its available cash for unexpected requirements and investment opportunities. So this is also known as financial flexibility. So what is the meaning of financial performance of an entity? Okay, so the financial performance comprises the revenue, expenses, and net income or loss for a period of time. So it is actually the level of income earned by the entity by using its resources efficiently and effectively. Okay, so this is also known as the result of operations and is portrayed in the income statement and statement of comprehensive income. So the information that we get from here is useful in predicting the capacity of the entity to generate cash flows from its operations. So nakikita din natin dito whether the management has been effective in employing the additional resources. Okay, so what is financial reporting? Financial reporting is the provision of financial information about an entity to external users that is useful to them in making economic decisions and for assessing the effectiveness of the entity's management. So the way of providing financial information or financial reporting is through the annual financial statements. Okay? So however, financial reporting is not only the financial statements but also other information like financial highlights, summary of important financial figures, analysis of financial statements, and significant ratios. So financial reports also include non-financial information such as description of major products, a listing of corporate officers and directors, and others. So what is the objective of financial reporting? So the overall objective of financial reporting is to provide information that will be useful for decision making. So specifically, AICPA FASB in its Statement of Financial Accounting Concepts enumerates these following objectives. First, to provide information useful in investment, credit, and similar decision. Second, to provide information useful in assessing cash flow prospects. And third, to provide information about entity resources claims to those resources and changes to them. Okay, so again, some of these theories may be quite familiar to you, but let's have a recap to them. First, the entity theory. Okay, so again, the accounting objective is geared toward proper income determination. So proper matching of cost against revenue is the ultimate end. Thus, this entity theory emphasizes the importance of the income statement, and this is explained by the equation assets is equal to liabilities plus capital. Okay. Second is the proprietary theory. Okay. So this accounting objective is directed towards proper valuation of assets. Thus, this theory emphasizes the importance of the balance sheet. It is exemplified by the equation assets minus liabilities is equal to capital. Okay, next, residual equity theory. The accounting objective is also proper valuation of assets. So, this is applicable where there are two classes of shareholders. So, mayroon tayong ordinary and preference. So, therefore, our equation would be assets minus liabilities minus preference shareholders' equity is equal to ordinary shareholders' equity. And we have the fund theory. The accounting objective is neither proper income determination nor proper valuation of assets, but the custody and administration of funds. So this is actually more on cash flows, exemplified by the formula cash inflows minus cash outflows equals fund. Okay, so the government accounting and fiduciary accounting are examples of this concept. So we now enumerate the users of financial statements and their information needs, though this is actually a recap again to your previous accounting subject as you have taken in your senior high. So first, the investors. So we will look at the financial statements whether we will invest or not, or whether we should buy, hold, or sell. Okay. For the employees, so of course about the stability and profitability of the entity. So of course we are concerned about the ability of the entity to provide salaries, retirement benefits, and of course employment opportunities. Next is the lenders. So of course, tinitingnan ng lenders yung financial statements to determine whether the entity can pay the loans and interest as they fall due. And we have suppliers and other trade creditors. So of course, tinitingnan yung financial statements whether this entity can be trusted and can pay their amounts owed that they owe on time. Of course, the customers. Okay? So, ano yung kailangan natin whether magko-continue gawing concern ba yung entity. Hindi ba siya pa-bankrupt or no, especially if you're dependent on the entity. Government and its agencies, of course, for the tax, no? Okay, for the proper observance of taxes. And the public, okay? So, like, the employment benefit or the employment opportunities, okay, the patronage of local suppliers, okay, and tinitingnan din ng public if the entities are providing information about the trends and recent developments in the prosperity of the entity at saka ano yung range of activities nila. So this ends our lesson for today, and please review for a while and we will have a short quiz after.